This is the briefing for Friday, March 4th. In last night's briefing to subscribers, I talked about the fact that we were at a point of being extremely oversold in the stock indices. However, I also pointed out that we closed at the low of the day, which suggested that the indices would probably move lower in today's trading based on the fact that they would have continued lower had the market not closed as it did in yesterday's trading. This is an hourly chart of the spiders, the Qs, and the IWM. Now, it's important to note, and I made this comment last night as well in last night's briefing, that if we saw lower prices, if we saw a lower open in today's trading, and there was a divergence in market breadth, to watch for a potential rotation back to the upside. When we opened today, I was a little surprised to see that the extent of the open, the gap, and then the first hour of trading. But if you look down here, you can see there was no divergence in market breadth. In fact, breadth was weaker than it was in yesterday's trading. In fact, breadth was weaker in all three of the indices than I've seen in quite some time. This is S&P 500 breadth, and you can see there were 474 shares trading lower as opposed to higher. That is just amazing to see. I don't think I've ever seen a number that's that low in terms of market breadth. 3,000 shares trading lower in the Nasdaq as opposed to higher, and 1,300 in the Russell. Now I want to point out something. There's an intermarket divergence here. And you can see it's a short-term intermarket divergence, but you can see that the spiders closed at the low of the day. The Russell or the Qs, the Nasdaq closed at the low of the day, but the Russell did not. The IWM did not. In fact, it made a lower low after the first hour of trading, but then it recovered. And of course, you can see that we spent most of the day in rotation as the other two indices began to sell off. Now, what that tells me is that there's beginning to show some cracks potentially in this sell-off. Now, with that said, I have to say that the market in terms of price development was a huge move in today's trading, but it was definitely confirmed by the market internals. The market internals are very, very weak going into the close today. Along with that, we broke important support levels. Now, in last night's briefing, I talked about the fact that I had looked at the longer term chart. This is a weekly chart of the spiders, the SPY. And what I did was I looked at this as a counter trend rotation to this rally, and you can see the series of higher highs and higher lows. Now, we broke the last higher low 4 days ago, right through here. So that suggests that we are transitioning into a greater degree time and price counter trend rotation, not one of these weekly counter trend rotations. So I looked at, one of the characteristics of a counter trend rotation is it happens in 3 steps, and potentially that there's equality between legs 3 and legs 1. So I did the calculation, whereas this is the first leg, this was the second leg, and the third leg projected down to 515. So in the briefing last night, I talked about the fact that I have the next lower low comes in right around 505. So the projection for the next level of support would come into the 505, actually 507, I think it was, to the 515 area. We blew right through that and closed right at this 505 area, which is the low from this day back. Let's see, that's back in August of last year. That's a 24. Yeah, it's August of last year. So we blew through that for a weekly close. We closed at the low of the day. We closed right at important support, and you can see volume was increasing as well. Now, looking at the daily chart, I have not seen 52-week highs minus 52-week lows this negative 2,503 shares. I don't ever remember seeing it at that low. You can see breadth continued to fall off today. So this move was certainly supported by the market internals. Look at volume. Volume just absolutely exploded in today's trading. Now, in terms of this volume explosion, what I was looking for today was to see some type of rotation back up, to see a buying tail come in, which would have suggested capitulation on the part of sellers. That did not happen today. Now, it could happen, on Monday. We could see some type of capitulation or some type of rotation back to the upside. But as of right now, we closed at the low of the day. Volume is strong. The internals are extremely weak. And that suggests to me that, as I discussed last night, the potential for a continuation of a lower move is certainly there, on the condition we do not have lower prices at the open on Monday, and that we have a divergence in market internals, especially in market breadth, which would then suggest strengthening within the indices and potential for some type of pause or counter trend rotation back to the upside. And the reason I say that is because this is the indicator I use for overbought and oversold, and you can see this is at an extreme I have not seen. We are very, very extremely oversold, which would suggest the potential for some type of pause or some type of rotation. But I have to say, in a long time, I have not seen the market internals to be as weak as they are, or I should say as strong as they are to the downside, or I guess that I should say weak as they are. This is just simply amazing to see at the close of today's trading. In terms of the Qs or the Nasdaq, we closed right at this 450 area in the Qs in yesterday's trading, and I really thought, well, okay, if there's a rotation back up, and this may be complete based on the fact that the spiders had reached equality between legs 3 and 1, then potentially if we begin to close this gap from yesterday, we would see that would give me a pretty good indication that we're going to see some type of continuation rotation back up, maybe even to test the 480 area in the Qs. That did not happen, and you can see we opened up below this 450, the low of yesterday, and just continued to sell off in today's trading, coming down to the next level of support at 423. And then, of course, in the Russell, you can see the Russell traded below the low of yesterday, approaching 190, and the next level of support comes in at 186, 187 area. So it's going to be very, very interesting to see what happens in Monday's trading. Now, I have to assume markets typically do run and pause in all degrees of time. But this move today was just a very, very serious move to the downside. Now, in terms of the weekly chart, if you look at this, then we're right at the next level of support, which comes in right at the 505, 507 area. The next level of support comes in about the 415 area, which would be this distance all the way down here. That's a pretty substantial move in terms of the spiders. Looking at the Qs, you can see the next level of support is going to come in right around the 330 area. That's a pretty decent move. That's going to be the 330 area. That's almost a 100-point move in terms of the Nasdaq, and in the Russell, looking at the next level of support, it's going to come in right around this area here. I didn't put a trend line in there. It comes in right around the 162 area as well. This is what I was looking for in the other indices, this buying tail. Now, this is a weekly chart, and I really don't put much credence into this in terms of weekly charts. But what I do look for is that same move, that buying tail that would come in on a daily chart, and that just simply did not happen in today's trading. So based on this analysis, I think we have to determine that the higher probability, because we closed at the low of the day and because the internals were as weak as they are, that we're going to see follow through on Monday. The condition to that, or the qualification of that, is going to be if there's a divergence in market internals, that would then suggest the potential for some type of pause or counter trend rotation and then we can analyze that to determine what the next degree move could be in the indices themselves. Have a great weekend, and I will pick this back up again on Monday for subscribers.